Welcome to The Real Market with Chris Rising, the only podcast that brings the real estate conference panel to your headphones. You'll hear from superstars from every realm of commercial real estate, the biggest brokers, the most well-known architects, the largest investors, and the most visionary developers. We'll learn what they do, how they do it, and what drives their success. We'll discuss the latest trends across regional markets, capital flows, both national and global, and we'll explore technology's role in shaping all of them. We'll take a clear-eyed look at where we've been, where we are now, and what's to come. Real conversations, real experts, real insights. This is The Real Market. Welcome to The Real Market with Chris Rising. I'm excited to have Cyrus Sanandaji with me today. He is the managing director of Presidio Bay Ventures. It's always nice to have someone who's a bit younger than me, who's got some great experience, and we can talk about what real estate's going to be in 2022 going forward. So Cyrus, welcome to The Real Market.
Thank you for having me, Chris.
Well, why don't you tell us just a little bit about Presidio Bay Ventures? I mean, it's a great name. Anybody who's familiar with Northern California, even though I happen to be a Southern California guy these days, knows Presidio. Tell us how you started the company, why you chose the name, and what you're working on, just basically, and then we'll go into some detail.
Sure. Well, the name ties to the genesis of the firm. I was formerly in the federal government doing acquisitions and development work. And at some point in 2011, decided to sort of take the leap and leave the public sector, join the private sector. And after going around and having a lot of conversations with a variety of folks from capital allocators to managers to developers, the idea that I had really was to sort of leverage the relationships that I had within the federal government and the understanding of how the federal government operates as it relates to real estate, and primarily through GSA, but also the variety of other agencies that do a lot of development and leasing work with the private sector. Decided to leave, formed Presidio Bay, and was based in San Francisco at the time, still am, and we're actually headquartered here as a firm. And so wanted to pay a little bit of tribute to the government roots there, and then also obviously the geography. So that's how we came up with the name Presidio Bay. And Ventures just ties to the ethos of the firm, which is to constantly sort of push and the boundaries on sort of what's possible, and to continually try to strive to advance our industry. But in terms of what we do, we're focused on three main buckets. The first being corporate development work in terms of built to suits or renovate to suits, with the federal government being our biggest tenant. And we've got a series of deals now with them over the last 10 years, spanning 8 states and all the way as far out as Guam, in the Marianas. So from that, we evolved and started doing a lot of spec sort of private sector development, covering office, R&D, industrial, and other sort of special use asset classes. Again, leveraging all of the experience that I'd had doing development work in the federal government, had exposure to all of those different product types. And eventually we sort of evolved and started the third bucket or focus of the firm, which is high density housing. And that dovetailed nicely with sort of 10 years on where we are as a firm, and looking at California's housing crisis and just actually the United States' housing crisis, but really California taking a very proactive step towards trying to address the shortfall that we have in terms of housing production and trying to promote substantial development and growth through these RHNA goals up and down the state, and finding that in these jurisdictions that are rather challenging to operate in, that we've got a great opportunity to pursue and sort of leverage two of the key sort of competencies that the firm has, which is to develop high density infill housing with some form of creative office or lab R&D type product, and obviously life sciences in the last 3-4 years has been a pretty hot product type. But sort of, again, bringing those two together and creating some really special projects and destinations, like our Springline project in Menlo Park. So at a high level, that's sort of, we always had these three buckets. We're finding that the buckets are starting to merge a little bit more, given sort of the political climate and the environmental climate that we're in, or economic climate as well, I should say.
Well, the first thing I want to break down with you is most people who I've had on the podcast or I've known over my 30 or plus years in the business love to say how they started at Goldman, or they started at, this is all pre-Blackstone even. It started all these Wall Street firms, and that was their relationships, and that got them their first investor. And they either built an allocator business or they built a operator business. And, that's usually the standard beginning of these things. And I think the audience is going to go, wait a sec, do you work for the government? I mean, do a double take on that and go, I thought the government only knew how to do things over budget and not on time. You obviously have a great track record of doing things on budget and on time, but tell us how someone who has aspirations to be in real estate decides that working at the GSA is the good career move here.
Well, so a couple of things. I had a background in both real estate and finance, and had a little bit of that from my time in undergraduate and prior to going to grad school. And I worked for a family office that had a ton of different assets, both in New York and in California, and across a variety of different product types, and was exposed and really realized quickly that it's one thing to understand the financial side of things and be able to put a model together. The reality is, if you don't understand the product that you're involved with, that you're investing in, that you're trying to garner the trust and build a reputation around sort of that competency and that know-how, you sort of need to understand how to put that product together. And in our case, how to actually build it. And so I had always toyed with the idea of finding my way back into real estate more formally after graduate school. But I'd always had this itch of wanting to serve as well. And so, and to work in a very different capacity in the federal government. My entire undergraduate and graduate coursework was in political science. And I thought that I would be, taking that path, until a chance encounter with a gentleman on a plane, actually flying from San Francisco to Geneva, led to a discussion where I sort of shared that. And I was at this crossroads in my life. Grad school is often this sort of pivotal moment for every professional, really. And I told him that I was really torn because I wanted to really double down and dive into real estate as an industry, though I didn't know exactly how and what I wanted to do. But I knew that I had relationships from childhood in the Middle East, and I knew that I had relationships from when I was working through college with this family office, and so knew a handful of brokers regionally, and had gotten to meet a decent amount of folks on the investment side, but really didn't know how to bring all that together. But then on the other hand, was torn and really wanted to join the federal government and to really sort of scratch that itch, if you will. And he said, well, there's this incredible nexus of government and real estate. As it happens, I am a director in this, in this agency. And this was the longest interview you would have ever had. Here's my business card. If you ever want a job, look me up. And I, didn't think much of it. I got back from my trip about 2 weeks later, and I called him and I said, were you serious? And he said, yep, absolutely. When can you start? Do you have a background clearance? Do you have security clearance? And so that started the process. And, about 9 months later, I sort of stopped my doctorate and program. And this was right after Obama had gotten elected. So this is sort of the end of 2008. And I moved to San Francisco and said, if I'm going to get this incredible opportunity, someone's taking this immense risk and sees something in me, believes that there's this desire to learn, the least I can do is take them up on it. Because think about where we were, right? The world had just blown up. getting a job, let alone in real estate, was a pretty far-fetched concept. And it sort of didn't matter what the pay was. I mean, it was awful. It was like $50,000 a year or something. And moving to San Francisco, in that time frame, it was decent, but it wasn't anything that that you could really live off of or thrive off of. But it was invaluable in the sense that I was given this tremendous opportunity and responsibility to start running teams and start running both on the A&E and D&C side, but also on the acquisition side, and also lease negotiations and interacting with property management, facilities management, and so on. And they absolutely followed through on their commitment and said, look, we can't pay you monetarily, but we can pay you in experience and we can pay you in education. And so if you're willing to take advantage and if you're willing to work hard, it's yours to sort of, to write your own course. And, I did everything from getting a degree in construction management from Cal and gotten a facilities management degree from Penn State. And it was just the federal government for that 3 to 4 years really was an incredible sort of learning ground for me while I was actually cutting my teeth on real deals. So I would never have it any different way.
Well, you got into some specifics, but I do think, because this is kind of outside the box thinking for, I think, how a lot of people get into real estate. Like what would be an example of a tangible project that you worked on during your period there with the federal government, the GSA, that a sophisticated real estate person or someone in the business would kind of understand, but probably doesn't really know what it means? Do you have an example of anything like that?
Yeah, I mean, look, and I'll avoid kind of specifics, but there's a particular law enforcement agency. They had a requirement that was delayed substantially, and so picture yourself in a tenant, occupier type mindset. And in this case, there was no federal assets that were available for them to occupy, and so you needed to go out into the market and tour vacant space and meet all the brokers and figure out exactly what spaces can actually meet these requirements. And they weren't vanilla requirements. You sort of had to have a sally port and a loading dock and so on and so forth. And it happened to have to be in downtown Oakland on top of that. So you needed setbacks and there's all sorts of security considerations. Well, we ended up doing a deal with a large institutional landlord after they went through the bidding process. There's 2 landlords that were competing for the requirement. The one we ended up doing the deal with, had not spent a lot of time doing this type of government leasing work. And there's a lot of complexity to it in terms of the shell requirements that you have to deliver and so on. But in terms of my personal experience in going through that, I got to evaluate a market at sort of peak vacancy, right? At the trough of a recession, got to evaluate the physical condition of each of these assets, got to understand innately kind of what the dynamics were at play in that market, then have to understand and evaluate the ownership and their wherewithal to be able to actually follow through on those improvements. Liquidity was a massive issue at that point, as you remember.
Lived through it.
Yeah, and these
lived through it and worked at a company that didn't have much liquidity.
Well, and that was some of the challenges, right? The government was signing leases with folks who couldn't finance, even with a 20-year lease in hand, couldn't finance the built-to-suit because they didn't have the balance sheet or the wherewithal to put up the guarantees, even on CTL financing type deals, which is 105% of your cost financed up front. You still need a completion guarantee, and people weren't able to do that. I mean, people don't remember how bad 2009, 2010 was, how bad those years were, excuse me. And so anyway, so it gave me this great perspective, but I was responsible for taking these projects from soup to nuts. So from program requirements and development with the tenants, all the way through negotiating that lease, getting that contract signed, and then overseeing the design and then eventual construction and then occupancy. And so it just gave me this exposure, which was tremendous to all the different facets of what goes into occupying spaces. And so now sitting on the landlord and developer side, get the benefit of sort of how these tenants view the space and the market and so on.
So given that we have so much cynicism out there about the ability of government to get things done, and especially about, I know from the landlord side, so much pessimism about dealing with GSA and the amount of time it all takes. You're probably the only person I know who's been at GSA and made the transition over to the private market and had success doing it. What would you say are the things the government and GSA does well that you learn from, and what you don't think they did well and you learn from, that allowed you to go out and start your own business?
I'd say that my experiences are reflective of sort of the moment in time, which was, an awful recession. I mean, essentially the greatest financial crisis since the Depression. And so there was really no one out there with liquidity. The federal government having access to capital was obviously a major driver of being able to be effective at that time. And I'll credit the Obama administration for passing legislation at the time, or policy, I should say, not legislation, at the time that sort of precluded built-to-suits. They said, look, we've got a vacancy issue in the office markets. The federal government's one of the biggest tenants as well as one of the biggest landlords in the country. Why don't we use government interests to help bolster the economy, and particularly the commercial real estate industry? And to the extent that we can, we should bend over backwards and try to accommodate our requirements in privately owned buildings throughout the country. And this was an example of a 100,000-foot lease that we signed in downtown Oakland, which was the largest deal that was done in the East Bay that year, and one deal of the year and all that. I mean, it's indicative of to show you how bad, to at least the listeners, to show them how bad the economy was doing at the time. I've got to give a lot of credit to the federal government and particularly the Obama administration for that policy. Now, that policy remained for a little bit too long, and I think hamstrung the government and created a lot of inefficiencies as it relates to particular requirements, particularly around these law enforcement and military and intelligence agencies that have very highly secure requirements that you just can't fit into a vanilla office building. But the intention was right, and certainly one that I think from firsthand, in the $500-600 million worth of deals I did in less than 4 years, meaningfully enhanced the financial position and at least of the landlords we ended up doing deals with. And then similarly of the architects and engineers and general contractors and all the other various consultants that we ended up hiring to build out those spaces. I mean, remember this was the time we had the American, the ARA, right? The American Reinvestment Recovery Act. That was a jobs program, and it was literally looking to stimulate, employment. This was just another way of achieving the same thing and advancing that.
It's interesting because I remember here in Los Angeles, there was a project 725 FIG where, trying to remember if it was FBI or Marshal Service or Secret Service, where they took it up. Secret Service took several floors, but then they needed on the parking garage, the roof, a very secure area for people to park their cars and all of that. And I remember the negotiations were quite difficult and all that. I can tell you that from the landlord side, never once did anybody on the team think that the government was doing us a favor by leasing space there. But, in the context of what we had to do and all of that, I bet you in a normal market, there's this cost benefit analysis that probably didn't happen there because there was this kickstarting effect. It goes back to a lot of how I feel when I see government do good things, and I'm not talking politicians, I'm talking government. They have terrible PR. They need to get it out there more that this is a good thing. And it's,
I think there's just a general lack of awareness, unfortunately, at that level of being able to respond to market dynamics, right? And I think if you look back on the last, call it 2013 to about 2020, beginning of 2020, that sort of 6-7 year span, it was impossible for the federal government to get any leasing done or get any of these private, public partnership type deals done because of how inefficient and bureaucratic their process is. And that's the downside, right? That's what they don't do well. And, this isn't a political observation. This is just fact, is that when administrations change, regardless of party, there's an innate inefficiency when you have administrator and secretary level, cabinet level change that happens because policies shift. And when policies shift so drastically and they're politicized, you can't run the organs of government efficiently. And we've politicized even the USDA, we've politicized the EPA, we politicized the BLM, for crying out loud. Like, we politicized some very basic, really apolitical, right, entities, organizations, bureaucracies, that shouldn't have been impacted by sort of, the change in the White House or in Congress. And so there's sort of, from our personal experience, the last 5 years, we haven't pursued too many GSA leased opportunities to do built-to-suits or renovate-to-suits, because a standard procurement that would take 9 months or 12 months at most was starting to take 2 years, sometimes 2.5 years. And it's just not worth the cost and the risk of keeping buildings tied up for that long, when your opportunity cost to go do a deal in the same space with somebody else is that much higher, right? And I think that that's to the detriment of the federal government. And so, they're going back into a period in which they have more leverage, just given vacancies in the office market. But it's not a way to efficiently run. If I'm to sort of sit on the federal government side, it's not an efficient way to run your procurement and asset management strategy.
And I think there's a lack of confidence at times from the landlord side. I know we spent a year on a 150,000 square foot immigration court requirement, got through all the local, everything was approved, including column width distance, everything was there. Oh, don't worry about it. Just a check when it goes back to Washington, D.C. We're a year into this thing, all the money and all that goes back to Washington, D.C. We don't like the column width, kill the deal. And, obviously at a time like this, we'll probably go through that process again, but it just makes you kind of roll your eyes and go, why would I want to go through this again? But I do see, if I'm sitting in your shoes as a bright guy who's watched this and seen this inefficiency, go, well, maybe there's an opportunity to go capitalize on that, both for your benefit, but also for the government's benefit. So, and just kind of knowing a little bit about your entry into the private sector, there had to have been one deal or something where you said, okay, I think I got enough where I can go start a business. Can you talk about that, and what went from I'm enjoying what I'm doing and I'm getting a lot out of it and I'm giving a lot out, that made you say, it's time to start Presidio Bay Ventures?
It was actually the deal I described in Oakland. And it was a number of reasons. I had a long conversation with the principal on the other side of the table. And his first question was, what the hell are you doing in the federal government? So that I appreciated it. And the flattery was nice. But, I asked him, I said, look, this is what I want to do. What are your thoughts? And he said, I don't think there's a seat for you at any of these traditional, development type firms. But remember, I was sort of running a built-to-suit practice, like in terms of, we had clients, and that was really who, were internal federal government agencies. But it was running this sort of soup to nuts business within I call it a business, but as you think about it in terms of service. And I ended up actually interviewing with a large REIT that focuses on data centers, and they hadn't previously built. They didn't have a built-to-suit business at the time. They'd hired a gentleman who was extremely talented, who was focused on more customer-oriented sort of development, and we're starting to frame the discussion around sort of built-to-suit and actually being able to deliver specific product and projects that their existing customers needed. And so through a couple of introductions and around the golf, ended up, interviewing and discussing and sort of talking and pitching them on this idea of really formalizing the business as a division of the business, and had an incredible offer on the table. And I sat back and I had this sort of moment in time where I thought, I could go extremely low risk and ultimately low reward for me. And I think people sitting in that position at that time would make different choices based on personal preferences. I didn't have a family at the time. I was single. I thought that if there was this moment in time in my life where I have this resume and I have this experience that I want to now leverage for my next step, some of the frustrations of being within the federal government that you've touched on, I felt being inside the government too. You're sort of hamstrung a little bit, a lot in how you operate. And part of the fun of figuring out how to optimize your process within government fades when you get to do it and you optimize. And, there's only so much even a deal junkie can pursue because you're sort of competing with yourself at that point. And so I remembered sitting down and having discussions with a few folks that I think of as mentors. And I told them, I said, look, it's this incredible opportunity. It's a publicly traded multi-billion-dollar REIT, great position. I can see myself rising within the organization, et cetera. Or I could go do the exact same thing for myself. I just need to go figure out the capital side of it. But, am I willing to bet on myself and go do that? And what's the worst that could happen? I fail. Great. I'll learn from that and I'll be able to pick myself up and go figure it out. I don't have a mortgage to worry about. I don't have kids to worry about. I don't have, et cetera. And so I decided that, despite how great that opportunity was, the bureaucratic nightmare that I had just been through for almost 4 years was not something that I wanted to get myself, enthralled in. And the nature of the company really had nothing to do with it. It was just the concept of the company being a larger organization. And I realized that I wanted to do my own thing and hang my own shingles. So that's how the company started.
Well, I mean, it's a great story. My experience is, though, there's something that lights the interest, the opportunity to do a deal, some great frustration that says I can't take it anymore. But when you said, okay, I'm out of here, I've enjoyed my time working with the government and I'm starting Presidio Bay, what was the kernel? What was the deal? Because I have to imagine it was a deal.
Look, the beauty of the federal government is that everything is scheduled out. So I just looked at the pipeline in our backyard and I said, I'm tired of giving deals to the CIMs and the Heinzes and the, Boston Properties and Beacon. I mean, literally every institutional owner was, in my mind, making a tremendous, was creating tremendous value through these leases. There's no reason I couldn't just go sit across the table from my former colleagues and negotiate the same for ourselves. So I just saw a ton of developers outside of the major cities, small developers who had amassed a phenomenal portfolio and built some real companies just doing this. And I candidly knew that I could do the same, if not better, and at least was willing to bet on that. And so I saw the pipeline and figured that I'd be living on an airplane for a little while, but had all the brokerage relationships and, both on the landlord rep and even the tenant rep side, had all the architectural engineering GC relationships throughout California, Nevada, Arizona, Hawaii, which is what the area that I covered, and decided to just go for it. And, again, the federal government posts these requirements daily online. And so it was just sort of a matter of being able to get out and, you start with an internet connection and a laptop. That was the company for a while. Right.
Pretty amazing.
And then from there, I think the biggest challenge of building the business was building our capital base, and starting with high net worth that, know you, and family offices that get to know you through referrals. And you just need to start kind of building from there. And that's been the journey for the last 10 years.
So what was your favorite kind of kickoff deal that made you feel like, okay, I'm less of a internet connection laptop person, and now it's more of a real company?
Our 85 Bluxom Street office deal. So we had tied up a bunch of different buildings and sites for a specific government requirement. And at the time, again, the inventory was abundant, with very little sort of, tenant demand in the market. So we were able to tie up a bunch of these buildings in San Francisco. And after doing the deal sort of and securing the lease and then buying, one of those buildings, I was able to convince our capital partner to, at the time, one of our capital partners to actually then take some speculative risk on an adaptive reuse project. So one of the other buildings we just ended up moving forward with and renovating on a spec basis, which again, at the time, they're solving to like a 10 cap. I mean, this is literally early 2012, underwriting to a 10 cap, which is incredible in today's world. But there was that. And then I ended up being able to partner with a seller who sort of had regrets about selling after we entered into contract, and it was a family, and they're incredible. They're still one of our LPs. Not at all a traditional sort of high net worth family, but this was their singular asset, and it was, a phenomenally located site. And, one day we went out to lunch and said, look, if you don't want to sell, don't sell, just contribute into the partnership. Yeah. And you'll be in this thing forever. And 8 years or 7 years later, we still own the asset. And, it's a brand new, newly constructed office deal that we finished. And we broke ground in 2014 and finished it in about 13 months. Pre-leased it during construction on a 12-year basis. Once it stabilized, we put, some really accretive sort of CMBS debt on it, pulled out almost all our cash. And it's a single tenant deal that we've continued to own and operate since. And I think if we point to a deal, that was really the foundational deal that sort of propelled the company to on the path that it is today.
Who was it? Can you tell us who the tenant was? Who was on a 12-year lease then?
Yeah, it's Collective Health, who's now who then subleased it last year to Aurora, but at the time, had a great trajectory themselves, and NEA was one, and Founders Fund and a bunch of the other VCs were in there. Got a great credit enhancement out of them, and given it was new construction, they built out the space beautifully, and to the point where even in the sublease they ended up putting no money into it, and the tenant the subtenant moved right in, and we anticipate that at the end of that term, in about 5 years, that there's really no work that's going to need to be done to the space, and it's just going to be well,
I have to imagine it hasn't been lived in for 2 years given COVID restrictions up there, but
exactly.
So that's a good. Well, let's talk about it. You got some exciting projects, and this audience really loves to hear people passionate about projects they're working on. So maybe go through and tell us about a couple of the projects that Presidio Bay is working on.
Yeah. So there's a couple of initiatives we've been working on kind of within the food groups that we've talked about, but we've put together a pretty phenomenal portfolio of R&D lab or life science buildings. And we always talk about them as being R&D and lab because it's not just life science. It really is ag tech and food tech and robotics, and it can accommodate a whole host of different uses. But really, these are 50-50 office lab projects. We've got about 2.5 million feet in various stages. We've got about 150,000 feet under construction right now. Another roughly 1 million feet actually 1.5 million in entitlements right now. And then we just finished an assemblage recently that is going to go through an area-wide sort of specific plan that we then will submit an application for. But we're really excited about that, and it's all up and down the peninsula. And the idea is to sort of really leverage the ecosystem that exists in that sort of space, bookended on one side, between San Francisco and then all the way down to Mountain View, and all the markets in between. So from Palo Alto, Mountain View, Palo Alto, Menlo Park, all the way up to San Carlos, and then San Francisco itself. So the Mission Bay area, and so. We've been pursuing that portfolio and sort of growing that since really the first asset we pursued was in 2018. So we got into that space well before the 2020 COVID capital influx into the space. And so we've been fortunate to really find some great locations. We've been able to follow Alexandria into some of their key markets where they've really invested and created some incredible clusters, and we've been able to achieve some, serious scale in their vicinity, and as a result of their efforts. and we're really excited about all that, and continue to be, despite sort of some of the headwinds in the markets around, interest rates and so on. But sort of separate from that, and I think I touched on this in the beginning, but this whole concept of the regional housing needs assessment that's going on in California, these RHNA goals really are going to change the face of development over the next 10 years. And I hope that local jurisdictions, and we're already seeing this in some of what were formerly the more challenging jurisdictions to get entitlements in, are realizing that developers aren't the enemy anymore, and that you can't just regulate yourself into or out of a housing crisis. You've got to actually promote and encourage participation with the private sector, and specifically with developers, to take speculative risk. And I really believe we're seeing a seismic shift in the mentality at jurisdictions, including San Francisco, including places like Palo Alto, like Menlo Park, and so on, that are becoming much more aware, I would say friendly, but also aware of market dynamics and kind of some of the restrictions that have resulted in no net housing production over the last 10 years. It's sort of exacerbated the issue that we're in, or the crisis that we're in from a housing production standpoint, and are now recognizing that, with the stick that the state's pointing at them, realizing that they've got to work in partnership. And so it's exciting because it's a great opportunity for us to be able to get together and to actually develop some projects and get entitlements for projects that really are going to be the future, in our mind, the future of office, the future of multifamily, and bring them together. And our Springline project is a perfect example of that in Menlo Park.
I want to talk about the Menlo Park. I also want to just unpeel the onion a little bit on what you said, because our experience has been a little bit different. I have yet to see any city, especially some of the cities we do business in, enthusiastically jump into changing their mind on NIMBYism and things like that. We still have some very aggressive anti-development groups in cities like Pasadena and others who are gravely concerned that all of their downtowns are going to become like downtown Los Angeles or downtown San Francisco. But we have certainly seen the state win in court over and over again, and allowing projects that if the city itself could stop, they would stop. They realize they can't. But we are seeing developers try to meet some of those needs of the no's that they heard. And that brings me back to your project, because I feel like the little I know, I don't want to act like I know a whole lot about it, is that your project is one that maybe 5 years ago was dead on arrival, or 8 years ago, and now is evolving into something that is more palatable to communities, with the state's stick behind it saying, look, we're going to have more housing whether you like it or not. Well, am I wrong on that? Or
no, I think the motivations are, I think there's a lot of factors that come into play. And I can speak more generally about sort of the peninsula markets that we're in, and even San Francisco, candidly. Look, at the end of the day, the stick is a powerful tool. SB 35 is an extremely powerful tool because it essentially guts any discretion at the local level. So understanding that developers have that nuclear option encourages and entices the local jurisdictions to come to the table. But we're seeing something else manifest itself, which is a generational shift. A lot of NIMBYs are aging out, of these markets, candidly, right? They're not living in San Francisco anymore, or, in downtown, they're not living in these urban areas. And you're seeing a younger demographic move in that is much more pragmatic and much more focused on social equity. I think is really one of the drivers there. And that sort of spawned all these YIMBYs and YIMBY movements to counter the NIMBYism, right? And I'm not talking about, the housing action coalitions and the BOMAs and I'm not talking about our own real estate funded groups. I'm talking about grassroots organizations that are actually passionate about housing and believe that, not displacement, but just that the growth of these companies that they work for, whether it's Meta or Alphabet or what have you, Apple, is actually causing, an affordability crisis for even some of their own coworkers who may not be, earning the same engineering pay that they do. Like the number of engineers that we've spoken to who have formed these grassroots YIMBY pro-housing organizations that have actually become extremely vocal and can mobilize voters in cities like Menlo Park or Palo Alto is staggering. And it's changed the political dynamic, which is incredible, which means that now they're electing members to council who share that same perspective. And that's the tide that we're seeing change. And I'm really optimistic. And I think the other part of it too is that if you approach it with a pragmatic lens, which is that unfortunately housing alone in California doesn't pencil, let alone housing it's a 20 or 30% affordable, 35% affordable rate without any subsidy or tax credits or otherwise. It's recognizing that housing production has halted for a variety of reasons, but ultimately culminating in feasibility. So how do you make a housing project, or how do you ensure housing units or housing production is increased? You allow the developers to also develop commercial, which is really the valuable stuff when you're talking about Palo Alto or Menlo Park or any of these markets, San Francisco, et cetera. Maybe not San Francisco today, but up until 2 years ago. And so tying the two together, maybe not directly, in some cases actually explicitly, like our project at Springline in Menlo Park. That is really going to be the future, transit-oriented, mixed-use development that has a component of commercial, retail that's community serving and really an amenity, and then housing. And bringing those uses all together has proven successful. We haven't had a ton of that type of development in a lot of jurisdictions, and I think we're starting to see more and more of it. And part of the unknown is sort of conceptually, if you can't envision what that looks like or what that experience is going to be, the naysayers are just going to double down on there's traffic and there's this and that. And you let sort of perfection be the enemy of good, and you're not going to get anything done. But with Springline as an example, we've been able to bring members of various communities and cities to the project and sort of show them what the great sort of positive benefit of having all these uses, co-located, to create sort of a true destination from both a placemaking and just a community serving perspective, and how that yields just really positive result, beyond just for the development, beyond just for the investors, but really for the community at large. And that's becoming the model that we're leveraging.
Let's go into a little bit more. We don't have the advantage of sharing screen at all, but describe the project, the size of the project, the ambitions for the project, some of the issues that you knew going in you were going to have to address, and how you address them.
Sure. So it's a 6.5 acre site. It's comprised of 3 buildings. So there's 183 apartment units. There's 200,000 foot office buildings, and then about 35,000 feet of retail. And it's all sitting on top of a podium. There's 2 levels of subterranean parking, about 900 stalls. It was originally 1,000 stalls when it was entitled, and then when construction started, we modified some of that. So we stepped in to the project. We essentially came in and took over the project early in the pandemic, sort of 2020, and there was absolutely no pre-leasing done at all on the office or the retail side. And now we're heading into a pandemic where the entire sort of existence of office is put into question, and construction has been stopped due to the shelter-in-place orders. And so we were stepping into a product designed in the early 2000s with a mid to late 90s perspective that took so long to get entitled and permitted. And by the time construction started, right, you're already building something that's functionally obsolete from an operational standpoint. And then your entire sort of thesis around who's going to occupy these spaces is put on its head, because you have no idea what the future of office or multifamily looks like, or retail for that matter, right? So it was a really challenging time to be able to think through sort of some of the dynamics that we're seeing unfold between the sort of migration out of cities like San Francisco or even downtown LA, and towards some of the more suburban markets, and then understand and see how the tech world was responding, how the professional services world was responding, how the variety of hedge funds and private equity and VC tenants, which make up the majority, a substantial portion of our market here, were responding, and having a lot of conversations with them. So now construction resumes, we're identifying all sorts of issues with the project. We then are needing to make changes while we're progressing construction, and then essentially reposition the whole asset relative to the market and start attracting tenants. And we were relatively successful early on. In November of 20, we'd signed our first tenant, and it was a large private equity group. And from there, the sort of, again, that placemaking strategy started resonating. We started offering and speaking to what a lot of the existing inventory was lacking in light of what the needs of the occupiers were, the end users are during the pandemic. A ton of outdoor space, a ton of amenities on site, sitting on top of the Caltrain station, a huge, area for bikes and, dog parks and so on and so forth. And, I think one of the things that we did well, in hindsight, and our thesis sort of played out, thankfully, was we knew that occupiers sort of had this really big question mark around how much space they needed in the future. And we saw space planning. We were willing to spend a lot of money, because to us, this was sort of user research. We were getting input directly from these different users. So we were entertaining LOIs with tenants we knew we didn't want in the building necessarily. Like, we had 5 or 6 LOIs with law firms going at any given time, but we gave them all 15 cents a foot to test it, because we wanted to see what they were going to come up with. Like, how are you going to be able? And so then we did the same with a few tech tenants that we thought were a stretch, and we kind of encouraged them to do that. And we sort of started evaluating and seeing that it was all over the map. There was really no clear answer of how much space they needed or thought they needed, whether they wanted to go back to kind of the enclosed office versus open office layouts. And so all of the test fits we started sort of gathering, we started refining, and we came up with sort of the professional service model, which was more enclosed offices, private offices, and then the creative model. And then we essentially ended up test fitting both buildings in their entirety. And so now we had all our marketing materials, but it was informed by all the tenants. And what we realized very quickly was that space is a service. And so is retail on top of that. So we ended up partnering with this incredible incubator and co-working operator, Canopy, super high end, high touch, and sort of really matched the branding and the sort of level, the quality level of the project. And we did about 25,000 feet with them, 20,000, a little 23,000 feet or so.
And with them serving more as like a property manager, or they actually lease space?
They lease space. There's a base rent, but there's a rev share component to it.
Yeah.
And we knew that in that market specifically, there was a ton of family offices and high net worth that just wanted one or two offices.
That's 25,000 out of 200,000. Is that?
That's right. It was about 20,000 out of 200,000. We did about 10%.
Yeah.
And
how did the lender feel about that?
We didn't have a lender. Thankfully, we were all cash on the deal. So, which allowed us to do some creative things.
Place to be.
Yeah. And so what that did was it allowed us to have conversations with prospective tenants and said, don't stretch to your outsized range on your square footage. Start lock in space that will accommodate your needs today. And if you ever worry about not having enough outdoor space or not having enough event space or boardroom space or all hand space, well, we've got this incredible space downstairs, and you can just rent that. It's a la carte. You don't even, so just you can accordion up and down. And again, that resonated. And so we're almost 90%. We're basically 90% leased at this point in the project, and at really phenomenal rents too.
So the real question, though, as I think we both know, is the 90% makes my heart go pitter patter for you, because that means if you did put debt on, you could cover it, or you're getting the returns for your investors. But the Silicon Valley right now has the worst daily occupancy of any market in the country, in the low 30%. I mean, LA, we're in the low 40s. You know, Texas, most of the Texas cities are all way above 50. So what are you saying? Have you delivered a project that is encouraging people to come to an office every day? Or is it making you rethink, like, well, if we're going to encourage people to get here, we have to deliver, we should have done more of this type of space for the other? What's your real life experience about people coming to the office in the Silicon Valley?
Look, it's low utilization, and the Castle numbers don't lie, right? So all the swipes and the badges, I mean, that's real data. I'd say a couple of things. We're still early. We just TCO'd the second building, and we haven't even TCO'd the residential yet. That should be imminent any day now. In fact, final inspections are tomorrow. We're currently building out all of the TIs in the 9 restaurants that we've signed leases with and signed deals with. They won't open until the end of Q4, early Q1 of next year, meaning so Q1 of 23, Q4 of this year.
Mm-hmm.
And so we're going to have to pick this conversation back up, you know, a year from now, and I can tell you, but I feel really strongly that entire sort of merchandising plan, that retail breakdown that we came up with in terms of the tenant profile, I think is going to encourage a tremendous amount of traffic. I think one of our, you know, we're naturally an office first business ourselves, and we're in the office 4 days a week. The biggest challenge in downtown San Francisco is that we don't have as robust an amenity base anymore, because a lot of these businesses have had to shutter. And that's the sort of vicious cycle, right, that you look at. And when you talk about what's going to encourage you to actually get back into the office, well, there's employers telling you, you got to get back in the office. And I think a lot of these tech companies have been a little wishy-washy, you know, like Apple going out and mandating it and then backtracking because 1,000 employees sent, you know, a little email complaining. Like, I think that a lot of that's going to change in the coming months as more and more of these firms, they may not lay off, but they're certainly halting all hiring. You're hearing. Yep. So I think that's going to change the mindset of a lot of the sort of entitlement that exists, you know, within these organizations. But inversely as well, I think we're getting past some of that fear around COVID. And I really do believe that you have to give people a reason from a destination and placemaking perspective to show up. And if you do, they will. And I think the proof is in the fact that, you know, I don't know where in LA you live, but if you go to Santa Monica or you go to Venice or you go to any of these places, you know, go to Montana, you know, street, and those restaurants and bars are packed.
Yep. Well, I'll tell you, I have been up to San Francisco recently, but I usually don't use a car much up there. But the amount of traffic in Los Angeles that has come back is unbelievable. Yet it's still not the 500,000 people a day that would come to downtown LA. So they're going places, and the restaurants are full. But in this core, they're not. I think there's, you know, basically 3 reasons people don't feel safe, whether that be pandemic or homelessness. 2, there's not a sense of cleanliness. I think that's changed down here. But when that comes back, and I think the 3rd is there hasn't been the push from employers. But that's what I get frustrated is that's a small percentage of the overall population. We're the most educated in the wimpiest group, these white collar office workers, because every cop's been coming back, every teacher's been coming back. Yep. So at some point and then you'll start to see it hum. You hit on something I do want to bring up, because you've got this unique project with 9 restaurants coming in. I just was doing an interview today about why some of these national fast food chains are coming back to downtown LA and coming back to some of the major markets, and why you're seeing Taco Bell, Cantina, and all that. The bottom line is I don't think people understand, when we destroyed all these wonderful places to go eat or go get a drink, you know, not because intentionally destroyed it, but because COVID did. You've taken out you've just wiped out what people want when they're working in an office, which is the easiness to go grab something to eat, the easiness to go meet someone for a drink and all that. but the suburbs still have all that stuff. So I don't know. That's my little pontification, even though it's your,
No,
I'm interviewing you. I just,
I agree with you 100%. And I think one of the travesties of really the last 2 years is it's exposed really some of the just, I don't know how to say this politely, but I mean, we have local government from San Francisco down to LA have absolutely destroyed these communities and these sort of incredible places, not just downtowns. And I think we've allowed property crime. We've allowed sort of a lot of the leniency that we've seen, whether it's Gascon in LA to, Chesa Boudin in San Francisco, that has had a major negative impact on quality of life, and not just in downtown, but throughout. I hear, more stories than I'd like about people being followed, whether you're in Beverly Hills or in other affluent areas in LA, into their houses, through, cars getting into their driveways, being held up at gunpoint, being robbed. We have unleashed and used COVID as this excuse to allow us, law enforcement to sort of take their foot off enforcement. And the institutions haven't helped because to a certain degree, like these DAs in LA and San Francisco encouraged it. And so I think we need to pull back from that rhetoric of villainizing, law enforcement and the concept of, laws and needing to enforce them. And I'm not talking about the police, but I'm talking about the notion as a society of actually enforcing our laws. And then, on the other hand, certainly not abandoning any criminal justice reform efforts like that. Those two things aren't mutually exclusive.
I agree.
They need to happen hand in hand. And if we can start, if the silent majority, which is really the mass sort of middle of the voter block in each of these cities, starts regaining the at least in California, regaining seats for more moderate and pragmatic candidates, and these, crazy progressive sort of policymakers at varying levels, whether it's council, whether it's school boards, whether it's, DAs, they need to be removed, and then we can regain California again. But I think until that happens, we're going to be held hostage to the whims of the extremes.
Well, and I think there's one other element that we talk about, and maybe it affects us a little bit more down here because there's this ongoing threat that they're going to reimpose masks again down here.
Right.
Not sure it's going to happen, but I go, wait a sec, you're going to tell people that they have to wear a mask when they're coming into the office. That's one, going to drive people out. But yet I walk out my door and there's someone defecating in the street, which is probably much more dangerous to our health, and nobody does anything about that. Yeah. This doesn't make any sense, and we've got to start making sense. I have a friend in Houston who anyway, he's a friend in Houston who is a good broker there, and I sent him the castle system thing the other day, and I said, what is it? What? I mean, I was just in Dallas. It's hotter than heck. It was miserable there. I've been just in Austin. It was hotter than heck. I was just in Houston. But you guys, everyone's going back to the office. I mean, he said, I don't know if it's politics. I don't know if it's just cultural. It's just we like to be around people we work with. And there's just something missing right now. It's frustrating. It's sad because we're having price resets that are going to be disastrous when it comes to refinancing buildings. It's going to ripple through the economy, and there doesn't seem to be the leadership out there. I love the state of California. I'm a Californian through and through, between LA and San Francisco. I still believe in the Republic of California as a driver, as a fifth largest economy, but there is just some basic quality of life issues we got to solve to inspire and to enable people like yourself and myself to go out and risk the money that we've risked. I mean, I sit on one block here in Spring Street that pre-COVID was coming back. We had a Citizen M hotel that got done. I got a Cambria hotel. We did a $60 million office renovation with a great restaurant on top and all that stuff. And it gets dark and nobody wants to go outside and they just don't feel safe. We can't have that. So, wow, I love that we get to talk about this stuff. But I think it all centers back around creating great places, and what you're doing, putting a project on a rail, allowing people to get out of their cars day to day, giving them access to the bikes, giving them the restaurants, is something in the long term is going to be an amazing project. What about in the short term, as you're looking at what we just described, we're both living through? What are some certain short term challenges you think you got to get over, and what do you think is going to happen? When I come up and see the project, what are you going to say? Well, we did this, this, and this in the last 6 months, and that's what made it hum.
We've got a few projects that we're tinkering with right now that are more San Francisco based, that candidly are need those tweaks. Fortunately not built yet, but I mean, we haven't started construction yet, but look, I think we've dialed in Springline really well. I mean, we're almost fully leased. We're 100% leased on the retail. We're already 30% pre-leased on the apartments, at a incredible rate. But I think that got it right in terms of what we're talking about. There's not a lot of projects that we have in our portfolio that you can sort of reverse engineer that type of outcome if it doesn't have those key ingredients. So one of our things, that we're focusing on a go forward is really to make sure that we have projects at scale that have that mixed use nature. Because no matter what happens, the concept of being able to pull together the ability to live, work, and play, and it sounds trite, and it's been overused in our business for a very long time, but when you actually see that come together, it sort of eliminates the notion of sort of like, I need to go to downtown as a destination to go to my office. There's 500 people that are going to be living at that same 6.5 acre, parcel. And there's another probably 500 to 1,000 people that are going to be frequenting the restaurants 7 days a week, hopefully. And so once you have critical mass, it begets critical mass. I mean, it's funny. We've got a 14-month-old at home, and they say sleep begets sleep. It's so true. And same thing, critical mass begets critical mass, right? You need bodies to encourage others to come out. Like I'm not that excited about going to a bar downtown for happy hour if I'm going to be the only person there. Yep. But if I know that there's going to be 100 people there, I'm going to be excited about going into the office so that I can go and look forward to that, or start going to and the one thing that we have here, which downtown LA, and I was born in LA, so I've spent a lot of time there, and we've done some work down there. But the one thing that we do have going for us in San Francisco that we need to leverage more, and I'm now thinking through the lens of our assets in San Francisco, is the proximity to the Giants and to the Warriors stadiums. Those stadiums are within walking distance of each other. They're sitting on top of the Caltrain at 4th and King. It's a phenomenal look. And then you're served by the ferry and so on. That is the central life of San Francisco. We need to encourage that. We need to have more and more people come into town. And
you may not know this, but I kind of know the guy who developed all of that.
There you go.
I still remember going up there with my father in 1994 when he took over Catellus, and we were walking through. They had the golf, the golf range there. And I remember walking with my dad in 94. I'm in law school, and I look at him and said, Dad, if you ever walk here by yourself again, I'm going to get so mad at you. It was so unsafe. And now you're right. I mean, the Warriors were the last piece of the puzzle. They tried so hard to deal with the prior ownership and bring them there. It was the new ownership that brought them there. But Mission Bay, is the example of, and if you say, okay, what makes Mission Bay different than, say, the financial district, or what makes it different than downtown LA? It's because exactly what it's the fact that it's an office park. It's a big office park called the financial district, or it's a big office park called downtown LA. You got to integrate the access, not needing a car. And I think both cities have all the infrastructure there. So what's the missing piece? You got to feel safe.
Exactly.
You got it.
And that's public policy. And I think we need to restore that social contract that exists, and government needs to play a heavy role in that. And we cannot continue to compromise the city, the constituents, the population's, needs and rights and desire for safety.
Well, I'm really excited on my next trip. I'm going to come and see some of the stuff you're working on. I mean, this has been in my blood.
We should go grab a drink, and I'll take you to a few bars that have more than a few people in them. So.
I love it. So let's just end with this. As you look, the one piece that and we'll have to do this another time, but I think that I want the audience to know is in kind of the early discussions about this podcast, you talked a lot about integrating technology into everything that you do and how that piece is really important. So maybe just kind of in with what is it around technology and communication with tenants, with communication with customers, communication with people in your projects that you think is really vital to the success, and what's unique, or what would someone see that they might not see if they pull into a Target somewhere,
Look, I think a couple things. I think it speaks to understanding who your tenants are. And, if we were in Dallas or Houston, would we deploy the same technology suite? I don't know if it would necessarily resonate with the same tenant base, just by virtue of the fact that the industries are different, right? But most investors, most professional service firms, most entrepreneurs are invested in the tech ecosystem. And so, again, as a means of ensuring that you are also aligned with their same perspective of being able to push the boundaries on everything that's possible today and sort of really welcoming tomorrow, you've got to implement the same, right? And really push the boundaries of their user experience in your buildings. And so we use technology to solve a whole host of different goals and issues that we have. But, an example today is that everyone keeps talking about ESG. Well, it's become a hot topic because institutional investors and Wall Street have made it a hot topic. But what does that mean for the occupier? What does that mean for sort of that end user? And how can you leverage technology to provide transparency and insights into the impact that they're having and that the building is having on the environment, or that their overall health and wellness within the building, for example? I mean, part of this discussion around safety, and I'm not talking about physical security, but we're talking about sort of health risk, right? Well, in the Springline project, we implemented a whole host of HVAC upgrades that included, MERV filtration, needlepoint ionization, and a bio wall, and so on. I mean, we leveraged a lot of our lab experience to do that. And some would say it's overkill for an office building, but all that's useless. It's a few words on a flyer, and maybe a broker can recount those three things. But what the hell does that actually mean? Pardon me. What does that actually mean for an employee working at XYZ company that's a tenant? Well, if we can leverage technology, sensor technology, and then actually have that feed through and go onto the app that we've custom built for the project that every tenant and visitor can access, it's sort of taking that concept of the water bottle filler and just the clicker on it and taking it to the next level. If you can see in real time the indoor air quality level in your space, or you can see how much power you're utilizing, or you can see how much water you've saved, etc., right? You can start influencing behavior and start influencing outcomes positively. And so that's just one example of something we've really leaned into to really help, as it relates to these ESG goals and to demonstrate them to the occupiers.
We have done the same thing. And for any of the audience who thinks this stuff isn't real, I point to it over and over again, that when you bring a potential tenant in and you can show that head of HR that when you have to deal with people's fears about coming into the office, and you can say, look at the air quality, these are real things. And so it's great to hear that when we're talking about having you on and all, that was one of the things that jumped out to me, is because I don't know if everybody recognizes what a leasing tool it is and what a public safety tool it is, and it comes together. So, Cyrus, I think we might go for another hour if we really want to talk about Mission Bay and things like that. But I think it's probably been a really good conversation. I really appreciate you being on The Real Market. I'm looking forward to getting to see you in person when I get up there in the next few months. So thank you so much for being on The Real Market.
Thank you for having me, and look forward to raising a glass together when you're up here next.
Sounds terrific. Thank you.
And please don't forget to follow us. We'd really appreciate it if you subscribe to the podcast. You can do that on Apple iTunes or any of the other podcasting services. It's The Real Market with Chris Rising. And follow us on Twitter at Chris Rising or at RisingRP. And please follow our blog, chrisrising.com or risingrp.com. Thanks so much.
This episode of The Real Market is brought to you by Rising Investor Platform. The platform provides accredited investors with exclusive real estate investment opportunities on a deal-by-deal basis across various asset classes, including office, industrial, hospitality, multifamily, and data. The platform also provides an inside look at deals in our pipeline while giving investors the chance to indicate interest before it's too late. We recently funded our acquisition of 9320 Telstar, a mixed-use office industrial property in El Monte, California, using our investor platform. To learn more about how accredited investors can join the Rising Investor Platform, please visit risinginvestorplatform.com.